Ladies and gentlemen, Friday evening here. The market has just closed. The futures is still open, but anyways, it doesn't matter. We are going to look into the weekly close for commodities, gold and silver. What a day for gold and silver. Big moves for gold and silver, taking out some big resistances. Let's have a look at it here. Again, gold and silver has moved the most. Some of the others, but let's go straight quickly through it. And if there is something that hasn't done anything since we looked at it on Wednesday, we will more or less skip it just to spare your precious time. Gold and silver. Look at it here, guys. We will start with silver first. The drawings we made this Wednesday, 2 days ago, is still very, very much in play here. We have that potential inverted head and shoulders in play. And yeah, just getting above that red resistance here coming down. Beautiful, beautiful, beautiful. Yeah, nothing much more to say really. I mean, I don't want to say things again because I might jinx it, but it looks fantastic here. Again, we need to get above this golden here. So getting above 24.3 and ultimately $26. 26 is the biggie. Let's look for that. Gold, yummy. Look at it here, guys. Big red resistance zone here. We came into it here as well, pulled back a lot shorter than I expected. I expected, a pullback that could go all the way down to 1900s to test that long-term golden. Clearly, that is not the case for now, and we have now regained the 2K level for gold. I'm very excited to see if we hold for the next 24 minutes, but still that weekly candle, that's a beauty to say the least. And you can see the weekly candles here, green, 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 and it looks fantastic. Again, I'm not gonna get too excited. I try to keep as calm as possible, but this for gold, this snapback here, yummy, 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 yummy. Alrighty, gold to silver ratio. Again, gold is actually doing better now than silver. So the gold to silver, we still have this massive breakout here in the gold to silver ratio all the way down to the blue, and now we made a double top. You can see here a double top for gold and silver. And again, the levels are quite clear now. We want to stay below the, let's call it 88 ratio, and we want to get below 84. That's really it. But again, the ratio is not going up because gold is going higher and silver is going lower. It's just gold is just performing very well compared to silver right now. But we want this to obviously go down heavily. And yeah, that will happen when silver gets above at least 26, maybe a bit earlier, depending on the pressure, but still fantastic. The good old Dixie, still, it's very bullish. It is still very, very bullish. Textbook blue flag here, breakout retesting. I mean, that is textbook bullishness all over. But let's see how it goes. If it's a fake out here and you start to do like this, then obviously it's bearish. But for now, the dollar is extremely bullish, and we cannot take that away from it. The 10-year rates, we have I'll close that one, excuse me. We have this rising wedge here. I'm still not quite sure that this is the low for the wedge, but I've added it in here. But the main thing to take away from the 10-year is that we're closing below those highs over there at roughly 7.9%. We can see them here. You can see it has been acting as a support and resistance zone, a level. So that's the first step, to close below here. And obviously we want to see this one here go down through the red rising wedge there, the big one, and then obviously lower down to 4.3 in the first go. That will definitely help gold and silver. And that's maybe what gold is sniffing out now. Who knows? Gold knows, at least. Oil, again, the bulls and the bears are fighting heavily. We had this fake down here from that long-term green. It's actually a neckline. You have that head and shoulders again. It's very steep angle on the neckline, but it's still valid. If we start to curl over here, again, very bearish. We're going down, in my view, to 74. And again, if we can start to take out that short-term golden, then we are bullish. Until then, you don't do anything in this beautiful little triangle here. You have no idea where it's going. The pressure, I will say, is bigger to the downside compared to the upside for oil still. That's my take. But yeah, you need the confirmation first before you can say anything. So again, nothing much to add for the palladium. I still think that this squeeze here, people are way too bearish, and it's dropped 70% over the past, what is this, 2 years, give or take. And I think shorts will be squeezed heavily in palladium. Same thing here again for our beloved platinum. Again, if gold and silver starts to move, platinum obviously will join, palladium will join. But for now, we're still in that bear flag down here. So yeah, nothing new under the sun. Again, we might have some trend lines coming down from here that could be bullish, but again, we want to get above the golden trend line here, which goes back to 2008 or 9 in that 10 years ago. And ultimately, we want to get above 1K. Until then, I'm skeptical, to say the least. Copper here on the weekly, let's see. We are bouncing at our predefined lows here at roughly $3.50 per for copper, bouncing here. But again, until we see that move up here, you know that this is a fake down. Until then, it's bearish. It should be a breakdown, and now we're probably going for retest at roughly 3.7, 3.74. Then we will see what happens, or if it will be something like that. You know, very decisive. But again, just like on oil, the pressure is more to the downside. But again, it could surprise to the upside, and many people are bearish and short on copper, just like on oil. So you could see some strong moves there. Speaking of strong moves, natural gas. Look at it here. The trend line. I want to actually go to the daily. You can see here, this trend line here coming down was our big. It tagged it here, faked out a little bit all the way down to this one here. The blue didn't hold in the first go. It went a bit further, but now we're just snapping back up again here. And it stopped at our level, that low over there. Again, showing that technicals, if you have your important levels in, they often work very well. Same here, I think when and if we get up to here to like 4.8, we should see some sort of resistance when we get there. So again, copper, nat gas here on the weekly. We are in a stage 2 uptrend here, bullish nat gas all over the place. We became bullish when we had that retest down to here. And now we're just stair-stepping higher, really. Looks fantastic. TTF, same thing. It didn't move quite as much as the American one, but again, same thing. Very bullish. 30 weekly is coming here. Will soon turn up if we stay in this range. And yeah, nat gas could be going way higher. The next target is roughly 62 on the TTF one. Coal, nothing to say. We're still holding the 2011 highs, and we want to break that very deep or angled neckline here before we're bullish. Until then, you should remain bearish. Well, not bearish, but neutral. And getting below the 2011 highs, obviously, you turn more bearish. Bitcoin, want to show you. I added this rising wedge up here, up there, all the way, and we did find resistance at the lower side of that rising wedge. Let's see what Bitcoin does. The past 2 weeks has been very strong. The main takeaway for Bitcoin is taking out that long-term golden trend line and the 31.5K level. Bitcoin looks good. Again, a bit frothy here on the daily, very overbought. But let's see how it goes. The weekly is still fine. The monthly is still okay-ish. But again, I'm still a bit skeptical. But for now, the technicals looks quite good, to be honest. But I think this move that we're seeing is this BlackRock spot ETF approval thingy. Same thing as here. We have the futures ETF getting online, or whatever you want to call it, and that was the peak sell the news or whatever kind of event. So will this be the same? I don't know. Nothing has moved on the uranium spot price. We are at the Fukushima highs at roughly. Now we're actually at 74 now, so we're actually a tiny bit above, but still, I'll still call it we are at the Fukushima highs. Let's see what happens. And yeah, fantastic performance by the uranium spot price. The miners just needs to join the party, really. But they will come. Sugar, good old sugar. We are still right at that upper. I want to show you. We are right here at this upper here, just fighting it here. We had a bit of a fake out here this week, but again, long term for sugar looks fantastic. And I think we're going up to roughly here at roughly the triangle high there, where will find, I think, big resistance, and we should take a longer pause at that point in time. But sugar has actually been performing one of the best commodities this year as well, up like 60% or so. That's quite amazing for a boring commodity like sugar. What we have here, we have soybeans. Nothing much has happened. Again, I'm still in the camp that this is the same point as here. However, we are seeing more fighting here for the bulls, and we had a bit of a fake down there. So you do nothing in this little triangle here. Breakdown here, very bearish. Going up here again, very bullish. Very simple, very clean way to look at it. And you don't play it smart in here to think that you know what is going to happen. Just wait for the confirmation, and you will save yourself a lot of stress. That's for sure. Nickel, I don't want to talk about. Nothing has happened really. Just grinding lower and lower and lower. Some beautiful ratios here. Silver against the M2 money supply. I want to show you the gold one is better, but silver is also looking like it's teasing us. We have this megaphone here, bullish megaphone, and we're above the long-term golden trend line, which goes back to 2011. And when and if we can clear this bad boy here, you have silver outperforming the M2 money supply. I know the M2 money supply is coming down big time, but still, it's a major, major takeaway, and that is what we want to see. Now to the final chart of the day in this video. Gold against the M2 money supply. Same thing, 2011 high. All the way down. I showed you this many times before. Where are we now in time? We have broken our bull flag right there. Beautiful. Let's celebrate. I mean, don't go all in, but this is a very good sign. Big weekly green candles breaking out above the 30 weekly, above a major, what is it, 12-year long resistance. This move here is a 12-year long in the making. We're finally showing some signs here. The next resistance should be the flag high there, and when and if we get above that one, gold is ready to go to all-time highs in my view. Fantastic to be so close, and yet I'm still, wouldn't say nervous, but I've been let down so many times. But this one here, the big 3 weekly candles just engulfing more or less the entire bull flag. As you can see, these past 3 weeks are taking out the entire range, more or less, well, not the entire range, but of the bull flag in just 3 weeks. And this has taken a half a year. So very strong momentum on the short term, which should spill over to long-term uptrend over the next years. Fantastic. I hope you enjoyed it, guys. As always, leave a comment. Do you agree? Do you disagree? And again, have a great weekend. We will see you next week. I have the weekly uranium ETF, no, excuse me, the weekly close uranium coming up, and maybe some others. We will see. Have a great one. Cheers.